All right, let's get into why and when we need to file Form M-3, who our Reportable's partners are, and like all this kind of details. So let's start with that this form is only like, it's actually just will be filed for very, very big companies. And let me explain you why. So if you're serving small businesses, like I don't think, most likely you will never need to file this form unless there's certain circumstances, like they make like more than $10 million in receipts, or their assets are huge, like around that threshold, or they own like a corporations that had to file M3s. And now let's get into it. Let me explain it into more details. So that's how this form Schedule M3 looks like. And let me just get into what it is. So basically, the first time you would be wondering what is Schedule M3 is by filling up Form 1065. And there is a couple questions about Form M3. But anyway, so like right here, you can see that it says the partnership may be required to file Schedule M3. So you'd be like, okay, so what is another schedule I have to file? So basically, why is it right here next to Schedule M1? Is because Schedule M3 is kind of similar to Schedule M1. So it's net income per books to taxable income reconciliation, but in a different format. And it's just different format, but it's kind of the same things. And who needs to file that Form M3? So let's get into it. So here, if you can see, and it's actually called net income reconciliation for certain partnerships. So that's why it's similar. And we get from, so we start with income, expenses, and total expenses, and we supposed to get to our information similar to what we got. So it's like right here it says net income per income statement, right? And this is kind of like we're getting to that number on this form. So that's a whole idea, and it's like kind of complex to fill it up, but this video is more like why we need to fill up, when we need to fill it up. So let's start with what is the purpose of this form, right? And we just discussed a little bit that it says, sorry, I'm just trying to find like some like really easy stuff to read here, and it's like a bunch of like really complex terminology. Well, in any case, it's net income reconciliation. So we reconcile from book to tax income, right? And here it's supposed to say that it is for certain partnerships, for more complex partnerships. So that's who needs to file it, but it's actually, we'll get into more details, who actually needs to file it. So there is a couple requirements, who must file it, right? So the first requirement is the easiest one, and it says if any entity that file Form 1065 partnership tax return needs to file Schedule M3 if any of the following is true. So any of those things. So the first one says the amount of total asset at the end of the tax year reported on Schedule L, line 14, should be equal or more than $10 million, right? So let's go to 1065 Schedule L, line 14, total assets. So right here, if the amount is more than $10 million, we need to file M3. That's number one. That's easy, right? Second one is the amount of adjusted total assets for the tax year is equal or more than 10 million. And let's go see what adjusted total assets are and like how do they calculate. So here's a worksheet, and there's a couple, like there's some information here as well, but the whole idea, but looking at this schedule, you can see is that we're getting from total asset, line 14, Schedule L, and then we adjusted for, so we kind of trying to estimate the fair market value of the partnership. And for that reason we add back, enter capital distribution. So we add back capital distributions. We enter any loss as a positive amount. You see like all these losses we enter as a positive amounts. And like there's certain additional adjustment that's a whole idea, like determine what is the fair market of the partnership is. So we adjust the total assets and kind of like adding back, yeah, like I already mentioned, capital, like distributions, losses, and any adjustments that reduce total capital, we add them back. So this is total assets. Okay, cool. So we got the second requirement, yay. So let's switch to third one. So third one says the amount of total receipts for the tax year is equal to 35 millions, right? And they say, look it up what total receipts are under Form 1065, this whole thing. So let me show you what total receipts are. So right here, under their description, for Form 1065, it says, the total receipt is defined as a summary of gross sales from page 1, line 1A. Then we add all other income, page 1, line 4 and 7, income reported on Schedule K. So if you have like interest, dividends, stuff like that, capital gains, we add it all here, right? So this is our gross receipt. So it will be more than just page 1, line 1A right here, right? So we add this, we add other income, and then we add all this stuff under Schedule K right here. Cool. So I think that's also not too hard. So we know it's like assets, right? It has to be 10 millions or more of assets, which can be total assets or adjusted total assets, which is assets plus distributions plus losses. That's kind of like the main idea. And then the fourth one is kind of complicated. I think this is hard. So let's see what it says. So if an entity that is entity that is reportable entity partner with respect to partnership. So we file partnership tax return, and there is certain entity that is reportable entity partner. So we have a partner who owns directly or indirectly the interest of 50% or more of the partnership's capital at any day of the like any time of the year, right? So this is kind of an idea. An entity that is reportable entity partner, and usually it's somebody who owns 50%. So that's confusing. So think about partners and owns more than 50%. But it's not as easy. So there's also like a couple more requirements. So when we scroll down to see what reportable partner is, I'm so sorry, I think I scrolled down too much. So here it says reportable entity partner definition. So we need to figure out who they are, like what those people are, like what is this partner is. So here it says, for the purposes of this instruction for Form M-3, the reportable entity partner with respect to partnership filing 1065 is the entity that, and here we have two requirements, 1 and 2. So we have to have the partner who meets those two requirements. So the first requirement owns directly or indirectly 50% or more of a partnership. And this is like important, directly or indirectly. Directly, it means just 50%, that's it. And indirectly, it means it owns somebody else and then they own somebody else. So it can be indirectly, but I'll explain you in a second. And also, it was required to file Schedule M-3 on its most recent filed U.S. federal income tax return. So that's kind of, this is those two requirements. So first requirement, 50% ownership, direct or indirect. Second requirement, filed M-3, right? Schedule M-3 itself. So let me explain you, go over this example with you so it will make sense. I promise you it will. It's not as bad as it seems like. It just seems like it's really bad, but it's not. So here's example of how IRS defines reportable entity, and that will make more sense to you right now. So let's read into it, and this is from instructions to Form M-3. So it says that the LLC, the partnership, owns 50% of Corporation Z. So this Z is a partner in this partnership, right? Owns 50%. Also, A owns 50% of B, C, D, E, and E. So this is ownership of all these partnerships as well. Z was required to file the Form M-3 for the first time this year. So it owns, so basically, a partnership has a partner who owns more than 50% who required to file M-3. So this guy automatically need to file Form M-3, right? And because those guys are owned by partnership, so they also indirectly related to this corporation Z. And because now also partnership has to file M3. So now the partnership has to file M3. And because the partnership has to file M3 and those guys are indirectly own corporation Z as well, that means that they need to file M3s as well. So now we have 1, 2, 3, 4, 5 M3s to be filed because corporation Z is filing M3. I know that was too much. It was a lot, but I hope you got it. So think about this direct, indirect control. And I mean, honestly, I don't think you'll see that as much in your career. But if you do, if you work with a huge partnership, this is a place to look. Thank you.